So let me provide you a preview of the upcoming panel discussion. Our panel represents a dynamic combination of practitioners providing different lenses on investor relations on their respective roles. For corporate PLC IR in action, we have Clare Chin, Head of Investor Relations with Axiata Group. Clare and her team's stakeholder engagements with shareholders, bondholders, rating agencies has contributed to lifting Axiata's sustainability profile globally, which is reflected in their current MSCI ESG AA rating. Our second panelist is Anand Pathmakanthaan, a familiar voice on radio, frequently sought for his views on the analyst scene. Anand is the regional head of equity research for Maybank Investment Banking Group. And of course, a very important view, what do fund managers look for when deciding their investment portfolios? Our third panelist is Muhammad Riduan Jasmi, with over 20 years carrying this mandate. He's currently representing Maybank Islamic Asset Management as its Chief Investment Officer. Okay, it's done. The stage is set. So without further ado, join me in welcoming back on stage Stephanie, together with our esteemed panelists, Clare, Anand, and Riduan.
Thank you, Dom, and welcome to our esteemed panelists, Clare, Anand, Riduan. Thank you very much for being here today to share your expert views on this topic. So to kick this off, straight into it, maybe I will just give a bit of a capital market landscape. So we see that the capital market landscape has evolved over the past decade, with more investment choices being made available to investors. At the same time, investors are getting more sophisticated. There are more considerations taken into account before making an investment decision. Clare, maybe I could start with you. From your point of view, how has the role of IR evolved over the years? Has expectations increased? And how do we keep a company on the radar of investors?
Thanks, Stephanie. Okay, I guess given my experience also in Axiata over the many years, it certainly has evolved to be a lot more demanding, whereby even when you have WhatsApp, literally you're almost 24/7 sometimes, depending on whether you might even have foreign investors in your shareholder list, and they can easily text you, and they do expect quite a so-called quick reply on whatever queries they might have for the IRO. So again, that is a lot more demanding. Obviously, maybe when we talk about how technology can help us along, maybe a chatbot might also be something which IROs might consider using going forward. The second point I wanted to raise was perhaps ESG. I think, Stephanie, you talked about that quite a fair bit. That also increasingly is a key focus going forward, where the IRO, together with, at least in Axiata, we have a sustainability team, will need to start that roadmap of tracking, monitoring, disclosure of requirements on what KPIs investors would be looking for and will be relevant in their investment decisions.
And then what about yourself? I mean, what do you think on this, and what is your expectations? Like, what's your expectations for an IRO?
Sure. Hey, thanks, Stephanie. Well, I think you very ably covered all the relevant factors of what an IRO needs to do in your presentation. So well done there. So maybe I should just stop here. No, I'm kidding. I'm not going to stop here. But really, I've been doing research for 20 plus years. Met all kinds of IROs, good and bad. But really, what an analyst really wants, in this day and age, obviously, WhatsApp speed of response is extremely important. Things move very fast these days compared to 20 years ago when we were using fax, maybe 20 plus years ago. But I think what analysts really want from IRO is a fellow analyst, basically. Your jobs are really pretty much what analysts need to do. You need to understand the company inside out. You need to be able to communicate what the company is doing in terms of strategy, in terms of targets, what the shareholders are thinking as well. Those are all relevant conversation points for not just analysts, but fund managers as well. I'm sure Riduan will agree with this. I think what I can bring to this conversation is my experiences with IROs. And I think one thing that you should definitely not do is penalize analysts who have an unfavorable rating of your companies. Yeah. So I learned this early on in the late 90s, so you know how old I am now. When I put a sales call on a company, the IRO called up my boss to complain. It was quite a wake-up call for me that, IROs at that time at least expect just one call, which is a buy call, or I won't talk to you. Now that's ridiculous. That's outdated. Don't do that anymore, because fund managers will hear of it, and they'll start to question the culture of your company. So don't do that anymore. In fact, if you want to do something really different, don't go on roadshows with buy call analysts. Go on roadshows with sell call analysts. Yeah, because when you go on a roadshow with a buy call analyst, you're echoing what the analyst is already saying. Riduan is going to hear the same thing twice. All the good things the analysts have told him, and then you're going to tell him all the good things as well. Go with an analyst who has a sell call and debunk or counter his arguments. That is a far more interesting conversation with your investors than you would have otherwise. So try to think out of the box and try to convince your management this is the way to go. It's not just, being an echo chamber, but actively going out there and having a conversation, not a monologue, with fund managers.
Thanks, Anand. Certainly something that I experienced myself as well, starting off as a young analyst in many years ago. Definitely, I think, we face the pressure of not calling a sell with the company, worried that, we would not gain access to the company. So I think what Anand has said is really resonates and something that we should really consider. Riduan, for yourself as well, as a fund manager, what kind of disclosures do you expect from an IRO? What is your expectations of an IRO?
Thank you, Steph. Firstly, thank you very much to Bursa for inviting me to the stage, talking about IR, which I think is one of the critical things that we looked at as investors or as the shareholders for your company. So interesting point pointed out by Anand when it comes to buy and sell call. So for us, what is important or what is the minimum thing expected out of us, other than looking for the report from Anand's side, which is the sell side, we also, to a certain extent, do our own research, primary research internally, because we just want to make sure that we have a concrete view of the company from the external and also from the internal point of view. So the very minimum that we require for us to do evaluation comes from two aspects. One is quantitative, and the other part is qualitative. Quantitative is the normal, the one that you always lodge, the financial numbers and whatnot. That is pretty standard. I guess there's a minimum standard required by Bursa or the regulator to a certain extent in terms of disclosure. The interesting part is actually the qualitative part, where we know that is where a lot of engagement with the company is required. We don't look at one company as per se. We look you and also the whole supply chain, and also what is the current development globally when it comes to a particular sector. For example, if you are in the technology sector, yes, we will look at you individually. We will look at you as well as compared to your peers, like Steph mentioned, in terms of the peer ranking or peer comparison. And we also will look at what is happening in the global space, in the regional space when it comes to the industry that you are in. So I guess that is where we come. That is what we look for when we are doing our internal evaluation.
Thank you, Riduan. Maybe just moving on a bit on some of the pain points of IR and also company accessibility. I think this is one thing that many analysts and investors actually face as well. Maybe the smaller investors is actually company accessibility. They feel that they cannot get access to the company. The company is not talking to them, and as a result, they are not getting enough information to analyze the company. So maybe Clare, I mean, given your experience as an IR practitioner, why is that so? You know, why is it difficult for maybe not specifically Axiata, but also other companies, given your experience? What are the challenges you face as an IRO, or you think they face as an IRO, which results to that?
Yeah, I think if a company is just sort of setting up their IRO sort of position as well, it's clearly a two-way stakeholder management, right? One is to also manage your own C-level to convince him or her that it is important. And the other way, of course, is to manage the external analysts and investors to put them together. I think sometimes, and I remember as a very junior analyst in my previous life also, one of the very interesting questions when you put a CEO or a CFO in front of very long-term investors is they want to know, who is this person sitting in front of me? Can I sleep well at night if I put money into his company? Does he have the drive, passion, integrity to deliver the returns which I'm looking for? So I remember one of my previous CEOs said, after coming out of a meeting with one of these very large foreign institutions, he said, that felt like a job interview. Because essentially they were asking him not about financial targets, not about strategic direction. They were asking him, what do you do in your free time? Okay. What did you do in the past? What made you take this role? And where do you think you can drive this? So that so-called rapport between these two stakeholders, the IRO is the key gatekeeper here. And I think that is actually a very important point for each IRO to remember, that you are the gatekeeper between both stakeholders.
Maybe Anand, can you also share with us, I mean, from your perspective, I mean, as an analyst, right? How does good access change how you write a research report or call a company?
Yeah, no, absolutely. I think, carrying on from Clare's point, access to senior management is extremely important in forming a view on the company. And also, having a very credible view on the company when you talk to fund managers, especially foreign fund managers who are very far away and don't have the kind of seamless access to management that, on-the-ground analysts in the country may have. So I think, I think a problem for Bursa, going back to your access issue, is a lot of companies are sort of owner-managed. The founder has built the company up, and then they list the company. They still have a very tight hold on the company. Free float in Bursa, Malaysia is not great, unfortunately. Must find ways to improve that. And given they have this tight hold, they don't really recognize the importance of, minority shareholders in terms of, they want the company to have more profile, better branding, more access to fund managers. They may be too distracted by being focused on running the business. Yeah, not all companies are KLCI companies which have resources to dedicate to IR exclusively and professionalize it. So I think if you are in one of these companies and your CEO or CFO don't recognize the importance of engaging with the investment community, it is really your job to educate them on this. Give them feedback from the analysts. The analysts want to meet you. They want to get to know you. The qualitative aspects of a company are just as important as the quantitative aspects. Yeah, that really decides between 8 times PE and a 15 times PE sometimes. It's not just the numbers. Yeah, numbers, all of us can analyze. They're very objective. But when you meet the CEO and CFO, you as Clare said, you can recognize the passion or lack thereof, and you would adjust your thesis on the company accordingly. So, please, it's really incumbent upon the IROs of these kind of companies to educate their own management how important it is to get in front of investors. Yeah.
Thanks, Anand. I mean, Riduan, from your perspective as a fund manager, firstly, I guess, how important is access to you? Is that one of the main criteria? So would you actually invest in a company if you don't really have good access to the company or never met a company and just depend on, let's say, analyst reports and things like that?
It
Is
is
that a criteria? Yeah.
Corporate access is very important for us. In managing clients' money, there's two ways of making money. One is actually via beta, where you ride with the market, and the other part, the biggest part, is actually on the alpha part. Alpha, I can rely on Anand research, and again, we can also rely on our internal. So there are instances where there are few companies that we are interested to invest, and none of the research house has a cover on it, and the pain point is that when we decided to have a look at this company, we are convinced with the financial number and whatnot, but the second part, the final part to any investment process for us is actually a corporate engagement. Okay. And that is where we get disappointed sometimes because, when we wanted to see the company, want to have a chat with the company, just to do our, like Anand said, the qualitative part, evaluation for the company, but the company somehow or other not welcoming enough, and to a certain extent, some of them basically deny us. So that is very disappointed for us, because we can see, in terms of the development of the company, the track record of the company, the growth of the company is there, but unfortunately, because of the lack of IR program or IR initiative, or the unwillingness of the company or the senior management of the company to come and talk to us, that would definitely have an implication to our overall research process in terms of scoring the company, and thus limiting our availability in terms of getting more info from the company. So that would basically bring down the overall score for the company, and thus we can't do anything much when the management itself decided not to be forthcoming with investors.
Yeah, so I think maybe I will move on a bit on, company access, I think we are clear is really crucial and really important, to drive your company profile, and also, of course, to drive investments into your company. Both, all three of them would testify to that. Maybe I just move on a bit in terms of, I talked about, this investor targeting tool, that we Bursa plan to launch upcoming as we progress in the IR4U program. So that would basically be a tool that, where we would work with a company, identify buyers, sellers, and things like that, given the data that we have, and help provide that data to you so that you can target the right investors for optimal shareholder mix and things like that. So I guess maybe a question, Clare, to you is that, firstly, is investor targeting something that's practiced by you or your company? And does different types of investors matter to your company, right? So for instance, obviously Axiata, given that's where you are, whether it's a long-only pension fund or a hedge fund, does that matter for you?
Yes, I think it should matter for every single company, actually. And the critical point I think the IRO is going to be responsible for is to be able to recognize what stage of the cycle that company is at. Essentially, is the company currently at a growth stage where your investor profile should not be expecting large dividends, for example, because you actually need capital to continue to invest for growth, and therefore investors will be rewarded with capital appreciation. Of course, then a company could move on to a more matured stage where you get stable cash flows, and again, your investor profile should be more reflective of, let's say, pension funds, long-term insurance funds that would only be looking forward to, let's say, stable dividends and pretty much stable capital returns. So I think that's very important for the IRO to review their shareholder list, perhaps once every year, and then plan your IR calendar accordingly. Obviously, Bursa is offering, a lot of good tools over here. And I think even when I saw that slide which you had at the end for 2024, I would probably, want to get in touch to see how we could also work with Bursa on that. So in short, I think it's very important to keep reviewing your shareholder list, target NDRs that are, let's say, facilitated by the sell-side analysts to help you target specific new investors to bring in that volatility even in terms of market movement. To me, you know, whether it is a foreign, local, long-only, hedge fund, retail, as long as there's interest,
Okay.
it's good.
Got it. Riduan, maybe, I mean, just in your view as a fund manager, does it matter? I mean, before you make an investment decision in a company, does it matter whether, you know, if you look at the shareholder list, whether there's a lot of long-only funds there, or hedge funds, or insti, or retail? Does it matter in your investment criteria and decisions?
I give you two perspectives when it comes to this thing. Of course, you know, one of the questions that we would, as a fund manager, as analysts on the buy side, I guess in the sell side as well, we will ask, you know, who are your existing institutional shareholders, whether they are local or foreign. So to us, it is important to know who already as a shareholders list, primarily because that could be an endorsement, you know, to the company. We know in the world of investments, there are a few fund houses that stresses upon ESG, stresses upon governance. You know, they look at governance as one of the key criteria before making any investment decision. So when we see all these names being a shareholders of particular company, that could be an endorsement to the company. That is the good part. On the other extreme, if we like a company, we have done our due diligence. Again, you know, when we have an engagement with the company, we've done our internal research, we've done our internal qualitative scoring and whatnot. And when we look at the shareholders list and we don't find any institutional names, does that mean a good, bad thing? It may not be. It could mean that, no, we are the first mover.
Okay.
We could be the one who has, who could see, you know, the gems in the company. And perhaps by us going first into your company, this could kickstart, you know, act as an eye-opener for the other institutional fund managers as well. So there's no right and wrong, but of course, knowing who is in the company is one of the key things that we will definitely have to consider.
So what I'm hearing is, as long as there's interest, always, you know, you would always want to get the investors in. And from your perspective, Riduan, is also, you know, kind of trusting your own analysis and also possibly being the first mover in that investment as well. So maybe just moving on, because we have had, and I have heard, at least also in my previous life, that some company owners actually coming to me or anyone in the investment community and asking, oh, I don't understand. Recently, I've been getting a lot of interest in my stock, but I don't know where it's actually coming from. Yeah, and the response to that is, you know, you could be included into the next MSCI. You could be included into the index in the next review. Yeah, so it does seem to me that a lot of companies actually don't understand or even know about you know, MSCI or FTSE or, you know, those kind of index inclusion. So maybe, Anand, maybe you could share some views, you know, why is the inclusion to the index important? What are the benefits? And should companies strive to get into the index, especially MSCI?
Yeah. Thanks, Stephanie. Yeah, you should definitely strive to get into an index if you can. You know, it's definitely a positive for your share price, really, and recognition of your company. Now, why is this? Let's take the KLCI for example. If you're in the KLCI, you know, many fund managers, many of the funds, maybe some that Riduan manages as well, they benchmark their performance against an index like that. There are different indexes, you know, there's MSCI, there's FTSE. It really depends on the mandate of the fund and which index they're going to benchmark themselves against. So if you're a fund manager, if you want to keep your job, your performance should be better than that benchmark, or at least on par. Which means when you compose your portfolio for the year and as you change it, you won't stray very far away from that index unless you're really ballsy. Yeah, unless you're taking a really off-market bet or off-index bet. You will not stray too far because, you know, you want your fund performance to be at least comparable to the index. So if your company is in the index, you're pretty much guaranteed a captive audience of fund managers who will hold on to your shares because they want their own portfolio performance to be pretty close to the benchmark performance. Yep. So it makes your shares that much more recognized, that much more investable to many investors who look at sort of index membership as a stamp of quality as well. Yeah, if you're in this index, you must have something, doing something right, and it's recognized that you are worthy of being in the index. Yeah, so for all those reasons, you should definitely, try to be in an index if you can. So every time there's a change in the Sharia index, there's a change in the KLCI index, these guys pay very close attention. And of course, we pay very close attention as well, because when that happens, there's usually a lot of buying and selling around those changes. And people who get booted out of the index see a lot of selling. People who are going in will see a lot of buying. Yep, that's how it works.
If you can add to Anand's point of view, I'm sure every one of us knows the word ETF. ETF is one of the fastest growing investment tools. People like BlackRock, Vanguard, they are the major reason why ETF is growing to the mounted to trillions of dollars. So ETF is one of the active participant in indices across the globe. So this is one of the reason why getting into any indices would be main beneficial to the investment company. And for people like me, if one of the ways for us to venture into the global space, if you don't have the resources, the easiest way is actually to buy an ETF. So if I want to go and have some exposure in the US, we can just go and buy the Dow Jones or the Morgan Stanley World ETF. So by that, we have an exposure to the global market. So what comprises of that ETF actually those stocks. When I buy ETF will then buy the component or the constituent of the respective indices. So I guess that is one of the reasons, the main reason why, like Anand said, it's like a jackpot if you get included into any of the indices. Just think of the other way around, investors in United States, and if they want to have an exposure into the Asia Pac, or specifically into Malaysia, and they don't have the resources to do any research and whatnot, buying ETF is one of the quickest and cheapest way of having exposure. So I guess that is one of the reason as well.
Yeah, our exposure to MSCI emerging market has dropped, from double digits, many years ago to now like single digits. So, Malaysia is becoming less relevant in the emerging market space. So I think it's something that all companies should at least understand the criteria. And as Riduan has rightly pointed out, that would basically create your following base for investors and things like that as well. So something that we should definitely learn more about, and you can learn that via the webinars that Bursa Malaysia organizes as well on MSCI index criteria, FTSE criteria, and things like that. So moving on a bit to ESG, and sustainability. So as we all know, Bursa Malaysia has mandated that main market listed issuers have to disclose common sustainability matters for full year ending 31st December 2023, and culminate the TCFD aligned disclosures for full year ending on or after 31st December 2025 for main market. For ACE market, they will need to do this on a staggered basis. Disclosures to take effect full year ending on or after 31st December 2024, and conclude with disclosures of a basic transition plan for full year ending on or after 31st December 2026. So that said, I guess maybe firstly, in your view, Clare, how ready do you think companies are to do that? Maybe not specifically targeting Axiata, but how ready companies are to do that? Yeah.
I have no choice to say that Axiata is very ready, right? No. I mean, it's a journey, right? I think, firstly, it was a journey for us. We started the journey much earlier on, even, I think, this is our 11th SNCR in 2022. But having said that, as we go through the exercise of getting, for example, our net zero target validated by Science-Based Targets initiatives, we're only just doing that initiative now. We are rebasing everything for scope 1, 2, and even 3, which is the most difficult part. So even though we started very early in the journey, it is still a long way to go. And to actually reach so-called net zero, in fact, it's not an easy target to even talk about reducing 1.5. We are even thinking based on current run rates, it could actually be closer to 2. So again, there's a lot of work and it's a journey. If you haven't started, it's really a very good time to start, not only because you have corporate responsibility, but we also have responsibility to the next generation.
Yeah.
In terms of carbon emission and how it's going to affect us. So I think it's not going to be easy. Again, at Axiata, we have a benefit of a sustainability team. So we work together. But essentially, so-called getting the data points on a regular basis from all your business units, subsidiaries, getting them to understand that you need to start tracking this and reporting it to you on a regular basis will take a lot of, let's say, top-down initiative to drive this. To be honest, even at Axiata, I've been working to get regular CO2 disclosures on a quarterly basis. And I must say, I'm still on the journey after 1 year. Perhaps our footprint is fairly wide across many regional entities, but that's no excuse. When we start getting validation, I think that also will give assurances to, let's say, fund managers that at least we also have third-party assurances, like SBTI, and obviously we're also going to be working for TCFD as well. So I would encourage everybody to start the journey today.
That's good. There's a good plug for Bursa. So Riduan, I guess maybe just turning on a bit to you. What kind of disclosures do you look at in your I mean, how important is ESG, of course, in your investment criteria? And also, is there a specific criteria that you look for? I mean, like specific sustainability disclosure that you look for or prioritize?
ESG has become the mainstream when it comes to the investment community, not only just for the company, but also the investment community. The main reason, basically because there's a lot of demand coming from investors. We have the likes of our biggest fund manager in town, EPF, Co-op, Tabung Haji. They are also embarking on ESG journey. So being one of the external fund managers for these big brothers, of course, we have to abide by their requirement and whatnot. For me, in Maybank Islamic, it's quite unique. Other than we evaluate the investee company, being part of the listed group as well. We are being scrutinized. I mean, Anand can concur on that. We are being scrutinized because we are a listed company as well. On a daily basis, we have to make sure that ESG is part of the mantra. We also need to make sure that we showing some improvement when it comes to ESG governance and environmental aspect as well. So we are quite unique because other than looking outward, we are also doing something inward. We have to make sure that we are the example of ESG when it comes to the financial sector, or to a certain extent, being the biggest bank, we are the example for carrying the ESG. The other part is that, like I mentioned, when we engage with listed company, especially the smaller ones, so ESG is one of the questions that we need to ask, because at the end of the day, we need to report back all our ESG activities, not only to the board of directors, but also to our client. So ESG is one of the questions that we ask company. The feedback that I get is that some of them are still skeptical. They're skeptical when it comes to ESG. This can come from two factors. One is actually they are not aware about ESG, the need to have ESG, and of course, secondly, is about the cost, which I don't deny. ESG, setting up like Clare say, there's a team that looks after sustainability and whatnot. Of course, there's a cost. I mean, we can testify ourselves inside Maybank. We need to allocate some cost to that. But whatever it is, our communication to the investing company or the company is that things need to start. Like Clare said, it has to start now, because eventually, 1, 2, 3 years down the road, this ESG could become the main requirement for a lot of evaluation by investors, by regulators, and also by the government to a certain extent, because Malaysia itself are committed towards carbon neutral, I think 2030 or 2050.
Yep.
So yeah, ESG is one of the critical part. The normal due diligence when it comes to financial number has been done before, but ESG is one of the additional criteria that we looked at when we start to engage with the companies.
Anand, I think you are also an ESG analyst, so maybe you can share your thoughts. How does it affect your recommendation and your thought process?
Yeah, I've been reborn as an ESG analyst after 20 years of fundamental analysis. Quite good, I think, given how the KLCI has been performing. It's actually quite interesting. But ESG, it's a huge space. It's a huge topic. Yeah. When our analyst teams in Maybank started on this journey in 2020, we started publishing ESG research in its infancy. We've come a long way since then. It was an education process for the analysts as well, and for myself as well. But I think a good starting point is to recognize you have to do it. You have to do it not just because everybody else is doing it, but because it makes good business sense. Climate change is a risk. Regulatory changes and taxes, carbon tax, these are all risks to businesses. You have to be aware of this. From a bottom line perspective, it's not just keeping up with the Joneses, but from a bottom line perspective, it makes a lot of sense to think about this risk, make sure your management teams are strategizing around this risk and are prepared for the future. So it's common sense, actually, more than anything else that you should be doing this. And don't be scared. There's a lot of stuff out there on ESG, a lot of acronyms. Good place to start, engage with analysts and fund managers as to what they want to know about your ESG factors. Because not all ESG factors are material to your company. Materiality is very important. You can get snowed under with all the ESG sustainability data coming out. You can put sensors in all your operations, come up with all kinds of data. 90% will not be relevant to either you or investors. So make sure whatever ESG data you collate and present is relevant to both your business as well as the people like Riduan, and for them to make an investment decision. Now, I'm super excited about the enhanced sustainability reporting requirements from Bursa. I'm very much looking forward to the common reporting requirements and that data coming out. Although I'm curious what the penalty is if you don't meet those deadlines. Does Dr. Umar spank you, or is there a...
Dr. Umar left us in time.
Okay. Send him a memo, get a spanking board ready. But hopefully it is enforced because standardization of disclosures is very important. If IOI and KLK, for example, have completely different disclosures, it's pretty useless to an analyst, because we can't compare. But now Bursa is stepping up and saying, we want comparable data. It's a huge step, and it makes it very easy to compare who is where on their sustainability journey. So I definitely commend Bursa on this. So just get started. And frankly, if you need guidance, it's not just us in the financial community who can help you. Your own upstream or value chain can help you. I mean, your emissions are Scope 1 emissions. But say you're a supplier for Nestle. For Nestle, you're a Scope 3 emission. And you are a problem for them if you are not conforming to disclosures and emissions. So work with Nestle, work with the person you're catering to and ask them, what do we need to do to improve our carbon profile or our sustainability measures or disclosures? Chances are they will provide a lot of help to you, and you may even work together to improve your ESG profile because it's a win-win. You look better, and for Nestle, the supply chain looks a lot less risky because they're engaging with you guys head-to-head. Nestle is just an example. I'm sure you all have different client profiles. But work within your value chains and help each other out, and that will be a way to move forward as well.
Yeah, that's really valuable advice, I think.
Maybe
Anand.
just to add on to that and to sort of circle back to the point where the role of the IRO within the organization as a two-way channel. It works both ways, right? Because as Anand said, when you start off in the journey and you could be swamped with all these acronyms and KPIs, and it may not be relevant to your company. For example, if you are a plantation company, how important is data privacy and cybersecurity to you?
Correct.
Right? That you don't need to. But for a telecommunication company, for example, a technology company, it is up there in your materiality matrix. So talk to the stakeholders, as in your shareholders or even the sell-side analysts, get their feedback as in what's important to them as an investment criteria into your company, which will be different if you are plantations, a construction, or a bank.
Yeah.
And then take that feedback back to your CEO or C-level or your board sustainability committee.
Yeah.
And give that feedback to guide you along the journey to focus on the KPIs you should be going to. So it would be a two-way street in that journey.
Yeah. Thank you. That's very enlightening as well, having that two-way communication and actually asking your stakeholders what is important to them and helping you form your ESG framework from there. There is, with the emergence of new technologies, I know earlier, Clare, you mentioned about chatbot and things like that. I just wanted to check, like with AI, you have ChatGPT and things like that now providing analysts and fund managers with new and powerful tools to gain access to information, helping them to analyze companies. Clare, maybe start with you again. But in your opinion, how can we leverage on this technology to help your communication to your stakeholders?
The first thing that came to my mind is, okay, how do I disrupt myself and work myself out of a job? But I think there was this article I read very recently in one of these newspapers. And it really struck me when they started saying that, investors and fund managers were using generative AI already to comb through, let's say, all your presentations or webcasts which you put on your website, podcasts which are available. And they don't even need to listen themselves. It is, AI, right? They use crawlers, let's say. And they can pretty much determine from the tone, let's say, how your CEO is speaking during the results con call. If there's too many, is that a convincing tone that the outlook is going to be really achievable? So again, this is going to all be done by perhaps generative AI. Then I was also thinking, I will probably need to start coaching my CEO to avoid these little pitfalls that will be caught up. But I think Anand may have a different view there, whereby he already thinks that, if there is some human element into it, that might also be a little bit more convincing. But I'll let him share his thoughts on that point.
Yeah, and then go ahead.
Straight to the rebuttal. But okay, no. I mean, ChatGPT and those advancements are interesting, and definitely if it does help you to sort of emerge better from these crawling and screenings that are done using generative AI, then maybe you should pay some attention to it and craft your messaging accordingly. No harm, right? You filter better in that sense. But I'm not into the whole smooth talking professionals having a better return on capital for your investment. Yeah, I mean, a lot of them look like me, educated, smooth talking, persuasive, but a lot of those investments don't do very well. Yep. A lot of the best investments in Malaysia are owners who can barely speak English, who have a lot of oohs and ahs, but they know the business inside out, and they deliver year on year, and they are vested. Yeah, they have a stake in the business. Yep. So I don't think Gen AI will do them justice. Yeah, so I think that would be hugely unfair to judge them on oohs and ahs. I would rather judge a CEO on how much he sweats when asked a difficult question. Because I'm pretty sure the guy with oohs and ahs will be very comfortable answering the questions that matter which is how is the business run, and where are you going to go, where are you going to grow, yeah, rather than a bunch of professional buzzwords that you tend to get from the biggest companies. I didn't say Axiata, I said other big companies. So I'm a bit iffy about this whole judging people by how they communicate from that perspective.
From the buy side point of view, when it comes to technology, there's a new, I wouldn't say new, it has been in the industry for quite some time, but have you heard about quantitative or quant investing? And under quant investing, there are some firms who are using a multi-factors quant investing. So multi-factors mean it can be qualitative, quantitative, anything under the sky, by the use of technology. And the company that my previous house and my current house, we do have a fund that utilizing quant as their main investment strategy, and they are using multi-factors. So one of the factors that they analyze is what they call sentiment analysis. So sentiment analysis is something that they can run, just run a programming. I'm not a tech geek, I'm not a programmer, but I know that they run a programming to collect any information on a particular company. It can be from the analysts, it can be from the chatters, it can be from the news, it can be anything. So that is how important or how technology can help people like me on the buy side. If we don't, for example, if we don't get enough access because of communication problem and whatnot, there's always another way of getting information, and technology is one of the way.
Yeah, Riduan, I think it's good that you said that. Actually, Bursa actually has a market sentiment analyzer tool on our Bursa marketplace, which basically cross sentiment with positive bias and things like that. And then we then sort of have a rating for them. But again, we always have a disclaimer to say that this is just sentiment based on news out there. But, in no way, you can use it to just kind of understand a bit better on or kind of get that company in your radar. But it's not something that you would need to make an informed investment decision and do the necessary analysis as well. But yeah, you're right. I mean, market sentiment analyzer tools are a great way for investors to look into a company. So maybe if I could move on a bit on shareholder activism, right? Because we see that shareholder activism can be a driver for investor relations best practices, while investor relations can then be used as a tool to manage shareholder activism, right? So more related to Riduan, but how do fund managers use shareholder activism to drive investor relations best practices? And is that something you actually do using that?
When we talk about shareholders activism, this is something not common in Malaysia like 5-10 years ago, but now it's getting prevalence because of the sophistication of investors that we have, pool of investors that we have in Malaysia, not only the local but also from the international community. From the institutional point of view, if you have not noticed that we do have a council called Institutional Investors Councils of Malaysia, where it comprises of the big boys, the likes of EPF Corp, some of the likes of Principal Asset Management, RHB and whatnot. So what we have under the IIC is that there are a few agenda that we want to push. One of it is actually in terms of the IR itself, the quality or how we then can improve the RR or the corporate access. IIC itself has worked directly with the company. I'm not sure if any one of you here has been called by IIC to basically have a corporate access to the IIC. The other part of IIC that we are working so hard now is basically on ESG, because we just want to make sure that as an IIC or as in the Institutional Investors Council, we do have one says or one decision that we need to make sure that this could become the standard for the Malaysian institutional investors. So ESG and of course IRO or the investors relation would be one of the key focus, other than the development of the fund management or the investment industry in Malaysia. So I guess by having this IIC, you would see more efforts being done by the institutional investors to elevate the industries in Malaysia, the IR industries in Malaysia.
Thank you, Riduan. I think in the interest of time, I see loads of questions on Slido, so maybe I will just proceed straight to this instead. First question that I have here sounds like it's more for Clare. How do you make the IR narrative interesting to your investors if your company doesn't have any new initiatives or story to tell?
You must have a story to tell.
There will be a story to tell.
Otherwise, you don't have a job. I think coming back to the earlier point where the issue raised by Anand from the sell-side analysts and even Riduan, where the company sort of shuts down when results are not good, right? And to the point that you should even engage a sell-side analyst with a sell call on you to go and counter that argument. And I think that's a very good point, which even I tried to convince my own CEO to do. Still working on it. I think to the question over here, we need to continue that engagement. Therefore, if you don't have a story to tell, at the end of the day, it's what I call a hand-holding exercise with your shareholders to explain perhaps what went wrong, what were the risk factors that hit the company, what are the mitigation plans that you're taking, and where do you see and how do you see the company coming out of this trouble or crisis which you're in today. So that in itself is a story to tell. It may not need to be a great story, but certainly that consistent two-way communication to keep engagement with your shareholders and potentially even new investors, because you could be buying at the bottom. It's very critical. So must have a story to tell.
Yeah. Another question I have here is, I'm not sure whether there's an answer to this, but what is the ideal shareholder mix that has demonstrated the best share price performance? As a fund manager, have you done this analysis?
I could answer that. More buyers than sellers.
Okay.
I don't know. There's no specific
Okay.
numbers to it, actually.
Okay.
Try to get Warren Buffett on your shareholder list. Definitely get your share price up.
So there's a question from probably one of the companies that says that good investor transparency, that they have good investor transparency, they have good financial performance, good dividends, and yet their share price don't nudge. What's your take? Also, we find that we should target long-term institutional investors. Is that true? Anand?
Sorry, I didn't quite get the question. Is it?
I think the question, I guess, is the company has been doing very well, and yet they have not been, their share price has not moved. So they feel that they should target long-term institutional investors. And the question is, would that help?
Well, it depends what you've been doing already up to that point, yeah?
Yeah.
Have you been engaging with investors at all?
Yeah.
To start off with. Yeah, I mean, if you're engaging with them and the share price is still not moving, then obviously you need to pay more attention to who you're engaging with, because you're wasting a lot of time, clearly, because it's not impacting your share price. So go back, talk to the analysts, think about your own business. Is it more relevant to a hedge fund? Probably the lowest quality shareholder you want on your shareholding list, objectively, yeah. All things being equal. The gold standard is you want a lot of long-only fund managers, because they are quite sticky and they're quite easy and professional to engage with. So those would be the ones you'd want. But if you're a dividend fund, when Clare and I were on the sell side, we really tailored sort of client fund manager engagements based on what the business model was. So if you're a dividend fund, we would advise you to, if you're looking at foreign funds, we would advise you to go to Europe there are a lot of dividend investors there, much more interested in your story than, say, American fund managers who are much more into growth than dividend stories. So, you may have to think about how you want to tailor your message, who you want to tailor it for, and who you want to engage with more closely if you're not seeing any fruits from your client or IR engagements so far. Yeah.
I've also got a question here, I guess maybe more for Clare on Axiata. I think recently you reported that your net loss has widened, unfortunately. How do you manage those kind of expectations for analysts, shareholders, and investors?
Sorry, my ex-boss has?
No. How do you manage that expectation from analysts, shareholders, and investors, like your recent or any negative news, or your recent losses and things like that in the company?
Okay. So this is now an IR results session now, which I will have to come back and spin what I spun a couple of days back. No, I won't do that. I think at the end of the day, it comes back to, the same answer, whereby, even if the company reports losses, even if the company is not doing well, you would still need to go out there to continue that engagement. Because I think shareholders and analysts would also still appreciate that engagement. They would remember that, although, yes, they could probably be cursing that you've eaten up another 5% of their portfolio valuation. But I think at the end of the day, they appreciate that because no company will be able to see share price consistently going up. There will be down cycles, whether it is due to your own performance or whether it is a macro risk, whether it is a Malaysian risk.
Yeah.
It will never be continuously up. So there will be down times, and you will still need to craft a message to your investors and shareholders. So I remember the first day I joined Axiata, moving from the sell side to the corporate world. And my boss, my ex-boss now, strangely enough told me this. He said, "Oh, Clare, welcome to the darker side." And I thought stockbroking was dark enough. So you need to be able to consistently engage. Manage expectations is very critical. And I think what Stephanie highlighted in her slides earlier on as well, where if the IRO also manages business planning, performance management, so it gives you an insight on the upstream, I would call, because IR is probably on the downstream in terms of communication. So if you have that value chain to foresee perhaps the next quarter is going to be risky in terms of earnings, ASP is down, then perhaps you could craft your messaging to guide expectations that, hey, guys, do be careful, do track consensus numbers diligently, because nobody likes to be caught surprised.
Yep.
They hate it. They just hate it. Okay. So manage that expectation if you can. Otherwise, if you're not sitting or carrying a business plan portfolio, I would say be a busybody and build some good relations with the finance team or even the strategy team, right? So that they could give you some insights to also craft that message. Obviously, not bordering into inside information.
Yeah.
It has to be disclosed publicly, perhaps in a group of analysts, so that the message is out there at the same time.
If I can add to Claire's point, as the CIO for Maybank or the organization, I would be very happy if I have a sell call report in front of me, because please understand this, as an analyst for the company, their job is to sell the idea. And if I have a sell call from any of the research house, that will become the check and balance in terms of making judgment in terms to the company. That's point number one. At least I can get the point of view from the guy who say, sell this company. The point number two is that once you have the sell call from the company, it makes more sense for us to go and engage the company directly and try to understand and try to prove the sell call is not right. That is from our point of view. So, it is not to say that, if there's 10 analysts and everyone calls a buy, it's not a good company. But if there's a sell call on the company, then it will become an eye-opener, at least from point of view of CIO. Because at the end of the day, I must make sure that not only that we look after return only, but we have to also address the risk, the potential risk. So by having a sell call, that could address on the risk itself, which I am very concerned. I have to put that as a priority. So again, come back to the point by Anna, don't be hesitate or don't shut down your engagement with sell side analysts when they publish a sell call, because it would be a good thing for people like me on the buy side, because then we can see the pro and cons and see your company from the returns and risk point of view as well. So that's what I'm trying to say.
I think it also helps you as a company to realize what are the other things, on the other side, right, that you possibly could improve on or work on, because from another perspective, an analyst's view is also very important to give that balance and that check and balance, as you mentioned. So I think that's a very fair point. This question, I guess, is quite interesting. I guess it is regarding what should the KPIs for an IRO be? Should it be tied to share price performance, volume performance, and things like that? So rather than ask the IR, maybe I can ask Anand first. What do you, as an analyst, think should be a KPI for an investor relations officer? What would be the best KPIs to have?
So you thought you'd ask the practitioner?
Yeah, so I'll ask you first so that you can give a different view.
Well, I don't know how you'd quantify it. Obviously engagement with investors and sell-side analysts would be the number one gauge for an analyst.
Yeah.
But I don't know how you would capture that. Maybe you have to build a database and then show it to your management, or there's a KPI linked to how many engagements you have with stakeholders. That'd be good. But, you guys are a bit like analysts as well. We have a lot of external polls in terms of investor relations as well. I'm sure nothing direct comes to mind. I'm sure there are polls on investor relations, best investor relations, yep. Well, try to win those polls because, those would be very, very good for you. Maybe your KPI should be tied to, getting a mention on those polls as well. Just like analysts are, I need to be visible in those polls to appear useful. So I think should be the same for IR as well. So that's what immediately comes to mind. I don't know, Riduan, if you have any. Yeah?
Yeah, polls is a good idea. So at least you would make an effort to also engage the votees, right? And then you can go back to your boss and say, this is the support I get in terms of my engagement. That cannot be wrong. I wouldn't advise tagging it on to share price performance because, as I said, it goes up and down.
Yeah.
It's actually going to be quite hard to manage that KPI. And it to a certain extent, can be due to external factors. So polls is good. I think number of engagements is good. It's always good to go out there after one result season to just put in a calendar NDR conference, make sure you have a minimum of 4, in your calendar, bare minimum. At least perhaps 50% of that should include a C-level, so that you don't get accused of not providing access to C-level.
Thank you. So it looks like it was a really interesting discussion. We have run out of time, but maybe I could just close this, maybe with one key takeaway from each of you. Any advice to the investor relations officers here today, or anything you would like to share? Maybe starting with Clare.
I think we've said enough, but I think perhaps in closing, and again, for those companies who have sort of, setting up that journey as an IRO, Perhaps you might need training, tools. So I would give Bursa a plug, perhaps,
Sure.
talk to Stephanie. There's definitely a lot of tools in IR4U program, and I'm sure they would be happy to help. But certainly don't move away from engagements when times are bad. In fact, it is probably more important that, because when times are good, the likes of Anand will be pounding on your door. Don't need to engage, they will come. But when times are bad, then the likes of Riduan will be pounding on your door. So always keep your door open as an IRO.
Thanks. Anand, some thoughts?
I mean, engagement is everything basically in your job. Same with us as analysts. We have to continuously engage with corporates, with you guys, with our clients like Riduan as well, to make sure we know what's going on for all stakeholders, and we can cater our offering accordingly. Same for you guys. You have to talk to your own management to find out what they're thinking, be able to communicate that to us on the sell side and on the buy side. And that requires constant engagement with both sides. Yeah, so make sure you have a schedule for those engagements and they're consistent. And as I said, don't discriminate. Yeah, it's a market. Everyone has different views. Yeah, so we should all be mature enough to accept different views and talk it through. Yeah, so engage with everyone.
Work with us. Good times and bad times. We can be demanding and annoying to certain extents, but I guess it's for mutual benefit. So that's all. Yep.
Okay, and I think this was really interesting. I think some points made here. I think to actually continually engage despite negative news or negative sentiment, to always pre-warn. That's much better than being surprised. To use your stakeholders to develop your ESG framework, to understand what are the demands out there, and that IR is always a two-way communication, right? So that's important. And I think lastly, what was mentioned in terms of targeting investors and things like that, I think it's important to know your shareholding mix and who are your investors and who is leaving and things like that. But generally, to continually gain more interest in your company and continually engage, I think that's important, given the role that an IRO has kind of increased very tremendously with increasing ESG disclosures and requirements out there. So thank you very much to the esteemed panelists again, Clare, Anand, Riduan. It was really useful today, and thank you so much.
Okay, thank you very much. Can we just do a quick group photo? Thank you. Yeah. Now, ladies and gentlemen, there were a lot of questions, and what we can do is, I think a lot of your questions will be addressed through the two books. But if you do have any over and above that, always reach out to our investor development team and email them at ir4u@bursa.malaysia.com. Okay, one more with... Okay, ladies and gentlemen, this concludes our event for today. The two QR codes, can we have them up on screen? Thank you. Will take you directly to the handbooks that we've just been speaking about. And as I mentioned again, the investor development team are contactable at ir4u@bursa.malaysia.com. Yes, don't forget to sign up for the newsletter on the portal. And with that, thank you for spending your Friday morning with us, and we bid you a good weekend ahead. Bye-bye.